What is going on, everybody? This is S Trade, and in today's video, we're going to be going over how to pretty much call the daily bias most of the time. Every time you get on the charts, how can you tell where the draws and liquidity are, where the price is trying to go to? Because in this way, you'll be able to catch high probability trades most of the time if you're already knowing which direction the market is trying to go to. So, without further ado, let's get straight into the video. It is pretty important to kind of be able to tell where the market is heading for the day, right? If you wake up in the morning, right, you look at pre-market session, you're looking at Asia, London session, and you're just kind of seeing where the market is currently heading at, right? Being able to tell where the market will go for the New York Open, right? Assuming that you trade New York session, is pretty important, right? Because that will kind of give you a sense of direction and sense you of a bias where you want to trade. So if, let's say, if you're waking up and you think that you're bullish for the day, you'll be obviously looking for longs, and shorts will be lower probability than the longs, and that will pretty much just end up making you take less losing trades and just pretty much focus on high probability, right? But a lot of the times people like over focus and overcomplicate bias and the draws and liquidity, right? They have too many things going on all at the same time, and they just kind of get stuck to the bias and they get married to a bias. That's what you kind of call it. And it's not necessarily that it's not important, but it's not the biggest thing in the world, right? Let's say if you are wrong on the day for the bias, it's not the end of the world. You could always just adjust to the correct bias. And I'm just going to be showing you guys what is going to be the most simple, most straightforward way to be able to tell where the market is going to be going for the New York session, right? So the first and the most important thing that I always look at is pretty much seeing what is getting respected and what is getting disrespected, right? Now, if you guys watch my bootcamp, you guys might know that I'm doing a lot of things revolving around IFVGs, right? Inverse fair value gaps. Those are my entries, but that also ends up telling me where the bias will be heading for the day, right? So taking a look at today, right? Let's go straight into the examples, right? The way I wake up and the way I look at the market is just by taking a look and seeing what is getting respected and what is getting disrespected in terms of fair value gaps and liquidity levels, right? I want to see certain displacement towards a certain direction. For example, if I'm bullish, right, I want to see bearish fair value gaps getting closed above and seeing displacement back up higher, right? And vice versa. If I'm bearish, right, I want to see bullish fair value gaps gets closed below and seeing displacement candles go lower, right? That is kind of what's going to indicate to me and prove to me that my bias is correct on the day. And let's say I think I'm bullish on the day and the price is doing otherwise, right? For example, we're dumping and dumping and dumping, and all the all the bullish fair value gaps are getting disrespected. And that way, I could simply just adjust and switch my bias, right? I don't have to be stuck to a bias. I don't have to be married to a bias, which is one of the biggest mistakes a lot of traders do, right? So just taking a look at today, right? I was personally bearish because of the whole Iran news, right, today. But just taking a look at today's price action, right? What do we see? We see that Sunday open, left a massive gap, right? We gap down lower. Then what we see overnight, pretty much price come up, right? Retrace half of the new week opening gap, and then we start to dump, right? We dumped almost 400 points, right? So then I was like, okay, I am, I am still bearish at the moment, right? But I want to see what price does, towards New York session, because we did still leave off this portion of a new week opening gap. New week opening gaps are just such easy tool for you guys to, have like a magnet for draws and liquidity. So this alone made me hesitate on my bearish bias. So I was, being open to being bullish if I'm wrong, right? So in this scenario, right, we see that price is dumping, but then what do we see towards New York session, right? We see that London, right, over here, we see there's a 1 hour fair value gap over here. It got closed above, right, but it also traded above over here. But then we also opened up below us another 1 hour fair value gap, and now we're tracing to it. Now this is going to be my condition. This 1 hour fair value gap is going to be my condition for the day, because if I'm truly bearish, right, I want to see this fair value gap get respected and then this fair value gap get closed below, right? So that is going to be my main condition, right? That's how I set up conditions in the morning. That's how I go about telling the bias, right? So if I'm bearish and we're truly bearish, price should not react off of this 1 hour fair value gap, and instead we should close below and then get displacement back lower to these lows and potentially other lows from previous weeks, right? So that was my condition for the day, right? So now if you go on a lower time frame, we see that price ends up trading all the way to this 1 hour fair value gap, and I open. Let's see what happened, right? So I open, you see this massive candle, right, happen, right? 200 points with a lot of displacement, right? We see that this bullish candle literally end up enclosing above all of these imbalances here, right? All these 15 minutes, right? If you go on a 30 minute, it closed above all of these 30 minutes, right? Looking at a 1 hour, it closed above all of these 1 hour fair value gaps, right? So this immediately alone tells me it's not bearish, we are bullish, because now we are disrespecting bearish PD arrays, right, which is over here, and we're seeing a lot of displacement back up higher. So in this scenario, I am now looking to take some longs, right? This could have been any, you know, plays over here, but that is not part of the video. But that is pretty much how I went about telling today's bias, right? So now I was bearish starting off with the news, but then I went ahead and switched my bias as the New York Open, because now this was indicating to me that we could potentially push up higher. And as you guys can see, we indeed did push up a lot higher, right? So let's take a look at another example. What do we see here, right? You go on the highest time frame, right? We're seeing kind of price come down lower for the past few days. But what do we see in the current sessions, right? So we see that Asia has this 4 hour fair value gap that ends up getting closed above, right? This is the main thing I'm looking for. I'm looking for inversions on higher time frame to show me the direction for the bias, right? So we see that price ends up closing above this bearish 4 hour fair value gap, which is a really, really strong indication that we could potentially go up higher and be bullish for the day, right? We also opened up this new 4 hour fair value gap over here, right? Price ends up retracing back to it, and now I want to see this getting held, right? I don't want to see price come down here and close below this 4 hour bullish value gap, right? So now if you come down lower, right, even on the lower time frame, right, so we see that price over here still pushing up higher, correct? And we see that London session ended up coming down, sweeping out Asia session, and now we start to kind of push up back up higher, right? Again, disrespecting bearish fair value gaps and potentially pushing a high, right? Now I'm not seeing any displacement yet past this London high, and that is not what I want to see. I want to see a potential displacement back up higher to confirm my bullish bias. So in this case, I was like, okay, we did edge this 30-minute fair value gap with this London low, right? So now potentially, if I am truly bullish, I want to see some sort of a manipulation lower into this 30-minute to then get a displacement back up higher to confirm my bullish bias, right? So now this 30-minute is going to be my condition for the day, right? And we see that price is already starting to kind of come down a little bit lower, you know, coming closer to the New York session. So if we take a look at what happens at New York Open, right? Bang. So we immediately retrace to this 30-minute fair value gap, right? Now, if you just want to go down on a lower time frame and see what is happening, right? If you just quickly go on the 15-minute time frame, right? We have a 15-minute bearish fair value gap over here in this leg, which ends up getting closed above. If you go on lower, we see all these 5-minute get closed above also. So now this condition is playing out for my bullish bias, right? You see this very, very aggressive wick, right? This is indicating that price is respecting this 30-minute fair value gap, and it confirms again by disrespecting and closing above these bearish fair value gaps, right? So now that is a simple and easy way to see how is price reacting, right? We see this 1-minute fair value gap, right? You could have even taken this trade along, this long over here, bang. You could have just take a long, and we see price immediately pump up high, right? This is what you want to see. You want to see displacement. Displacement tells you everything in the market, right? We don't want to see this, what we had in a pre-market, right? These wicks above past highs, right? Because that is not showing us proof that we want to push higher truly, right? Up until New York Open manipulates into a higher time frame PD rate, and now we're seeing displacement higher, right? This is how you could tell we are confirming our bullish bias, and we see for the rest of the day we do indeed go higher, right? So you could have just simply waited for this retracement and then taken a long past it, right? Just to have a continuation play, right? And that is how I was able to tell that we're going to be bullish on this day. Again, simply recapping from the 4-hour inversion, then retracing to the 4-hour, and we still see that this 4-hour is still getting held, right? You see all these wicks, right? All these wicks that are holding this 4-hour, and we retrace lower to this 30-minute. This is perfect and the most easiest way to tell that we are bullish and we are now pushing up higher. So take a look at another example. What do we have here? We have this previous day pretty much showing us bearish signs, right? We're coming down below, closing below all these bullish fair value gaps, right? All of these are on 1-hour fair value gaps. So this is all on higher time frames. That is kind of how we draw our narrative, by looking at the higher time frame fair value gaps. We see that price ended up closing all below these very, very higher time frame bullish fair value gaps. So now we could potentially be going bearish for the next day, right? So what do we want to see now, right? Pre-market kind of opened up, did a whole lot of nothing, but we do have this 1-hour fair value gap in this case. So this is going to be now my new condition, right? If we are truly bearish, I want to see potentially price to come up here, right? And I respect this level and then potentially go down lower, right? So let's take a look at what price does here. So we see price ends up coming up, trading to this 1 hour fair value gap, right? And this is again London session, and now we start to see displacement lower, right? So now again, let's say if you woke up, right, for New York session over here, and now you're starting to see what is happening, right? So we see price retrace to this 1 hour fair value gap, and then we closed below this bullish 1 hour fair value gap, which is pretty small. If you go down even on lower time frames, we see that price is closing below this 30-minute fair value gap. We see that price is also closing below these 15-minute fair value gaps. So now this is indicating to me that we could be potentially bearish for the day, right? Because we are respecting this 1 hour fair value gap on the bearish right side, and now we're closing below all of these bullish fair value gaps, right? So now let's take a look at what happens during New York Open, right? So again, this alone right here is already confirming to me that we are bearish, because we're seeing a lot of displacement candles past all of these lows, right? We see all of this low resistance liquidity that got built overnight, right? Now, if this was a fake bearish move, we would not see this displacement. Instead, we would probably see some wicks, right? Something like this. But instead, we are seeing a lot of displacement candles. So now I am confirming my bias for bearish. And now all I want to see is a potential retrace to certain, imbalances in this leg, and then get a continuation short. So if we just take a look at what happens during a New York Open, right? So we see price kind of consolidating over here in this level, right? And coming towards New York Open, if you're going to higher time frame, we have this very, very important level, which is this 4 hour fair value gap, right? This is my condition now. If we are truly bearish, I want to see this 4 hour fair value gap get respected and get held, right? This is exactly what I want to see. I want to see this wick get created at this 4 hour fair value gap. I do not want to see like massive bodies closing above this 4 hour. Now, if the 4 hour ends up closing above, I potentially might not be bearish anymore, because this is not what I want to see if I'm bearish, right? So now, if you go on the lower time frame, right, this day was a bit choppy, right? New York Open, we didn't do anything much. We just kind of retraced to this 4 hour. We're starting to see displacement lower, right? Kind of consolidating a little bit. Now, after we get our sweep over here, right? So after we get our very important sweep, again, this is a 10 a.m. High, which is, again, a very important key level. If you guys don't know any of these concepts, go check out my bootcamp. I explain all these concepts in those videos. So now this 10 a.m. high, which is very important, got swept. And now we could potentially be looking for plays, and we see this 5 minute immediately get closed with a lot of displacement, right? So now I could potentially just place a short right here, targeting all of this. Look at this perfect low resistance liquidity. Like, this is easy money. Like, when I'm seeing this, I'm like, okay, this is gonna hit almost guaranteed, because there's such obvious drawn liquidity. We left all of this low resistance liquidity, right? This low didn't get taken, this low didn't get taken, all of this low resistance. It's so obvious, right? We are now trading inside of a 4 hour fair value gap. Now we closed below this 5 minute, and now let's see. Again, the reason why I'm looking at 5 minute is because that is the highest time frame in this leg, right? We don't really have anything else above a 5 minute in this case. So now let's see what happens, right? Price ends up absolutely flushing through all of this low resistance liquidity, right? So now, just like I said, this is such easy way to just always know where the market is going. And if you're wrong, you could just simply adjust and have no issues at all whatsoever, because some people just get stuck on these bearish bias, bullish bias, and they're like, no, I'm bullish today, I'm only going to take bullish plays. And then the market is showing you that they're bearish, and the market is dumping, the market is displacement through all the lows, and you're still stuck on your bullish bias. That is not how a trader is supposed to be trading. You're supposed to be more reactive, and you're not supposed to be predicting, right? This video wasn't meant for you guys to be like predicting these levels, rather than you're supposed to be learning how to react to the market, right? You're not going to go and force upon the market, all right, I'm bullish, so I'm going to be just bullish, right? You're nobody, okay? Like, the market doesn't care what you think. You have to be reactive, right? If you're bullish and the market is showing you that it's bearish, there's nothing wrong with that. You're just wrong on the bias. Just switch your bias, right? Again, if you're only having the confirmation for it, right? If not, just like you see a few candles go in the opposite direction, like, oh, that's, I'm gonna switch my bias. No, you have to see higher time frame key levels get hit, higher time frame key levels get respected or disrespected, and then see confirmation out of that, just like I showed you guys now. And that is the way you could be able to tell the bias most of the time. Let's take a look at another example, right? This again is a very, very straightforward and easy example, right? What do we see here, right? Price coming down lower, right? And pre-market, what are we doing now? We are now respecting bullish fair value gap. So we have this 1 hour fair value gap in this leg, ends up getting respected. And what happens afterwards? We immediately displace higher to this high. We close above this bearish 1 hour fair value gap, and then we still are pushing higher. Right now, we open another 1 hour fair value gap over here, right? We have wicks pushing above it, right? We're not closing below this 1 hour. We're pushing up higher now, right? So this is now confirming to us that we might be bullish, right? So now, you see right here, we have another 1 hour fair value gap right here that we could retrace to and potentially go up higher, right? and this level that I have marked out is a very obvious draw on liquidity, which is this 4-hour fair value gap, right? Now, if you go on a lower time frame and see what market does at open right now, this is again confirming to us that we are bullish because we're clearly respecting bullish PDA raise and disrespecting bearish PDA raise. And now let's see what market does at open, right? We come down lower, literally take out this low, which is that 1-hour fair value gap, and we immediately push up higher. Now, how are you going to be able to capitalize on this? Simply by just taking a look at coming down lower and just seeing what is price doing, right? We have this immediate wick that gets pushed up higher, right? If you go on a lower time frame, we see price ends up closing above all of these bearish fair value gaps with a lot of displacement, and we immediately push up higher to this 4-hour fair gap, right? And let's say if you missed that, you could just simply just take a continuation model, right? Price ends up retracing back, and then we are now seeing again a continuation up higher for the rest of the day, right? Again, this is not an entry video, but just to show you guys how these biases work. Again, simply and simply we just reacted to how the market showed to us, right? We literally saw pre-market 1-hour fair value gaps are getting closed and the bullish fair value gaps are getting respected, and now we just want to see again the same exact way we just saw in Asia and London, just a little retrace to a certain imbalance or fair value gap and then push up from there, and exactly that's what happened, right? That is literally the only thing that you got to know about biases for the day, right? You don't got to complicate this any further, right? Just as long as you have certain fair value gaps in those legs, right, in previous sessions, so Asia and London session, if you're seeing that we're simply pushing past all the bearish fair value gaps and we're respecting all the bullish fair value gaps that we're creating, and we have displacement up higher, you're bullish, right? You have obvious targets above, you're bullish, right? Same thing with the bearish scenarios. If you see that price is dumping lower, right, we're closing below all the bullish fair value gaps, and we're creating these bearish fair value gaps that we were tracing back up to, and then we're having wicks out of those, and we're still pushing lower with a lot of displacement. You have obvious targets below, you are bearish. That is it. That's all you guys got to know. You don't got to complicate it any further. That is literally the only thing you guys have to know, and you guys will never be wrong about your bias ever again. Let me know if you guys have any questions in the comments below. This is it pretty much for this video. I hope you guys enjoyed it, and I will see you guys in the next video.